Started, it's noon and we've got lots of material to cover. So as you can see, we're going to talk about trading, investing in the new economy, or I guess you could say the current economy. So we're going to talk about creating income and protecting your downside as far as your portfolio is concerned. Who am I? I'm Brian. I live here, Park City, Salt Lake area, basically. So I'm the local arm of NSRO, I guess you could say. I just gave everybody a resources handout. If you haven't received the resources handout, you can see Dan right here, back by the camera here, and he can hand it to you. If you have any questions after the presentation or throughout the day, I will be over at the NSRO desk for the remainder of the day. So again, I focus on the fulfillment, if you will, teaching people to trade, invest for themselves, protecting their own portfolios, things like that. Who am I? This is a little bit about me. The first words up there, ski bum. If I can learn this stuff, you can learn this stuff. I was taught by a coach. That's the whole point of NSRO, obviously, is, hey, how can I learn something that someone else knows quickly? Yeah, I could read books, I could try it on my own, but when it comes to investing and trading, we really want to have as much capital as we can. So if someone else knows more and they're willing to teach me, great. I learned through a coach, and I obviously would like to have that experience with other people and have them get a return on their investment. So I was a ski bum. I moved to Chicago. I met a trader there. I traded bonds. I traded options. I traded foreign currencies, all different markets, all different strategies, all different styles. So that gives me a good basis to understand who an individual like you are and say, what are you looking for? What goals do you have? What kind of account size? All that kind of stuff that matters for an individual. So all of the coaching that we do over here, in the third banner over there, all the way on the right side, is basically about the services that we offer. So I'm in a position to do it because I've been in the markets for a long time, trading, investing, various markets, various strategies, and education was obviously a normal part of my growth as a trader. So again, I'll let you just read a little bit about how you can find me, and again, this is on the resources. You can find me at the University of Utah. You can find me in Park City at the Trading Investment Club that I host every month, free, no charge. There's definitely more resources out there on the NSRO website. We have webinars, we have videos, we do bi-monthly webinars as well, talking about the current things in the market. So lots of great information out there for you that's free. So again, when it comes to investing, you have to understand who you are as an individual. It's very, very, very important that you have a good understanding of your account, your time frame to reach a goal, your risk tolerance. Everybody has a different risk tolerance. Everybody has a different stomach as far as how they handle risk. So I put up here the 4 types of traders: day, swing, intermediate, position. You may be retired and you may be able to sit in front of the markets all day, but you don't want to because you have other things going on and you have a life. So I'm not going to let you be a day trader because I'd like you to be in front of the markets all day if you're a day trader. If you're a swing trader, and you can write this down on your piece of paper there, I'd like you to be in front of the markets at least 3 hours a day. You have to have 3 hours a day if you're a swing trader, which is a weekly time frame for a trader. They're looking to make a trade over the next 1, 2, 3, 4, 5 days, basically. If you don't have 3+ hours, then you can't be a swing trader. So again, this is understanding who you are. People like to ask me, what's the best style of trading? Well, there is no best style because it depends on you. If you have a job, you can't be a day trader because you're going to get fired. You're going to lose your job because obviously your boss is going to say, what are you doing? So maybe if you have a job, you move out to intermediate. An intermediate trader is more of a monthly time frame. So it's the person who has a job, who has other things going on and in their life, obviously, and they still want to trade and invest, but they have more of a longer time frame that they don't have to worry about watching the markets every single day. Position trading is more of your long-term investor, 3 months, 6 months, 9 months, and longer. So no matter what your time frame, we here at NSRO understand it and start to make strategies that fit who you are. So again, going to your watch list, your account size. If you have a $5,000 account, $2,000 account, whatever it may be, you may not be able to trade the same stocks and do the same strategies that someone with a $25,000, $50,000, with an IRA. So a younger person with not as much capital that they've accrued over their lifetime may not be able to do the same strategies and stocks that a person who's much older, obviously, who has been working for a long time and putting money away. Trade risk, and again, these topics are on your sheet that I gave you. Trade risk is basically how much you want to lose on a specific trade. a short-term trader for a day is going to lose a smaller amount than someone who's investing for a longer period of time. It's all going to work out in the end. I may make 3 trades in one day. You may make 3 trades in 1 month. I'm going to risk a small amount on each. You're going to risk a little bit larger because you're in the trade for a longer period of time. So you risk a little bit more to make a little bit more over a longer period of time. So that's at the bottom of the handout there that says account risk, trade risk, and then I have that equation there. How much of your account do you want to risk? And you divide in that how much do you want to lose on that specific trade. That gives you the number of shares or contracts that you can purchase. So nobody goes out and says, I want to buy 100 shares of Apple, or I want to do options, or whatever it is. They have to do this account management equation first, and that gets them so that they don't blow up their account in one trade. They trade according to their account size, according to what kind of trader they are. It's very, very important that you understand that. That's what we here do, again, at NSRO. We want to find out who you are as a trader and develop strategies for you that fit who you are, your lifestyle, risk tolerance, etc. Trading plans. Right there you can see it's the most important slide. You must have a trading plan for each and every trade and investment. Think about it. You're trading with people around the world. Whether you do a foreign currency trade, whether you do an option trade, whether you do a stock trade, whether you do an investment for the next 3 or 6 or 9 months, someone has the opposite effect of you. If you're buying it, someone else is selling it. If you're selling it, someone else is buying it. You better be right. Well, how do you do that? You learn, obviously, to have a trading plan for each and every trade so that you understand, I'm doing a trade based on this, this, and this, and if it does this, I'm going to do this, and if it does this, I'm going to do this. All it is a flow chart. So a lot of you are familiar with a flow chart. That's what a trading plan is. If the charts and the markets do this, I'm going to do this. If the charts and the markets do this, I'm going to do this. I understand what I'm doing before it happens, so I'm not like a deer in the headlights. I'm not caught. I have all those protective measures in place. So how do I learn to create a trading plan? That's the real important part of the presentation. How do I create a trading plan as a new trader or someone who might have paid attention but wants to get into themselves? Well, there's a couple different things we focus on. Fundamental analysis. And again, I explain resources for this on your handout. Fundamental analysis is the big picture. What's going on with unemployment? What's going on with real estate? What's going on with inflation? So you guys can walk outside. You guys can see how many homes for sale. You can see what the unemployment rate is because we talk about it on the nightly news every single evening, basically, or every month as it's reported. So that's the big news that you can follow, and you can start to get an opinion of what's going on out there by just paying attention to the news. A great way to do that is CNBC. If you have cable television, you probably have access to CNBC, and it's a great place to just keep on in the background as you're getting ready for work, as you're going throughout the day. Follow the news, follow the big stories. I'm not talking about listening to it and saying, ooh, I want to trade this stock or invest in this stock. It's what are the big stories going on around the world with oil prices and gold prices and the dollar, the big, big, big stories that I can grasp. Bloomberg, Bloomberg.com is a website that's a very, very good worldwide view of what's going on out there. And again, these resources are on your handout. And again, then the final one is forexfactory.com. It's an economic calendar. It tells me what's going on around the world, true factual data on that unemployment data, on that inflation data, on that housing data, on car sales, all different kinds of economic data to tell me how the economy is doing. We move very quickly from fundamental analysis, which again is our overall opinion, to technical analysis. Technical analysis is the art of reading a chart. And you can see the first line up there, it is an art, not a science. That's the great thing about the markets, is everybody can look at a chart and look at it a little bit differently. So that's what makes the world go round. But the fun part of it is it's very easy to get pretty educated on the main points of technical analysis, and that's what I'm going to talk about in the next slide. So again, technical analysis is the art of reading a stock chart. It helps me with my timing. When and where am I going to do something? So fundamental analysis might say, I think the economy is going to get better, or I think the economy is going to get worse. Now I have to say, when and where am I going to do something? Well, that's what the charts allow me to do. Time frames. Again, I may trade twice or 3 times in a day because I'm a day trader. Someone else might have a job, and they're not looking at the same charts as me, because why would they look at a 1-minute chart if they're looking at 3 or 4 or 5 months of time for their trade to develop? So again, focus on who you are as a trader and what time frame those charts are going to be for you. The trend is your friend. We're going to talk about that in just a moment. But do you want to swim against the stream, or do you want to swim with the current, obviously? So against the current or for the current, or with the current, the trend is your friend. Real estate, let's use that as a current example. Is real estate at a better price now than it was a few years ago? Everybody say yes, right? Would you rather buy real estate now, or would you rather buy real estate 2 or 3 years ago? You'd rather buy real estate now. If you had a lot of money, would you be purchasing real estate? Probably now is a better time than it was a few years ago. So if we have an uptrend, we want to buy an uptrend when it dips and is ready to take off again. If we have a downtrend, and the markets can go down, and we can make money in downtrends with certain strategies, when the markets go down and they pop up a little bit, we're going to sell that rally, and as the markets go back down, we make money. So we want to go with the trend. The trend is our friend. Finally, risk to reward. With reading charts, with understanding technical analysis, you can have a defined plan of where you want to get in, where you want to get out for a loss, and where you want to get out for a gain. And that starts to happen over and over. And after that, you get consistent results. Hey, I lost $2, but I was trying to make $3. I lost $2 trying to make $3. Oh, I had a winner. I made $3. I made $3 or $4. My winners start to get bigger than my losers because I let my winners run. So it's about consistent results over and over and over again. It's not a get-rich-quick scheme. It's using good data, being knowledgeable, and making a good trading plan based on the analysis that you have. This slide is very big. This is the second part of technical analysis. These 3 words are your friend. If you don't know what these 3 words are and you want to trade or invest, then you've got to go to Google and just Google it. That's the great thing about the financial arena now. It's in the news every day. Use the internet. Anything that you see here that you might be writing down and you don't understand what trend is, you don't understand what support is, you don't understand what resistance is, Google it. You'll get the term very, very quickly. Ask me, come on over. I'll give you books that are on it. I'll give you free websites that you can find it. I talk about it in my webinars. I talk about it on the NSRO website in my blog. So trend, we talked about it. If the trend is up, we want to be a buyer. Right now, the markets are going up, fast and furious. We want to be a buyer because that's the way the money is flowing. Support. Anybody out there take a guess at what support means? One word that would describe support? Anyone? No? Floor. I'm standing on it. It's my support. So if people start buying real estate right now, which way is it going to drive real estate? It's going to drive it up. People put a floor in and they stop the fall of prices. So it's like any commodity out there or any product. If a booth out here is very busy, people are buying it, that vendor might say, I'm going to raise my prices. There was a lot of support here for my product. So the same thing with stocks. If you have a lot of support for a stock, it can only go one way. It's going up because more people are buying it. Resistance is the opposite. It's the top. If there is a lot of resistance, it can't go any higher. People are pushing it down. The stock is eventually going to stop going up, go sideways, and maybe even down. So if you understand which way the trend is, if you understand where the floor is, where you can buy where other people are buying, and if you understand where resistance is, where you can sell where other people are selling, those 3 things can keep you out of a lot of trouble. So understanding those 3 words keep you from losing money and help you to profit. Those 3 words, that's all you need, because they're going to keep you from trading and investing in poor places. Right now, gold and silver and all these commodities are going straight up. It may be a very good trade, or it may be a very good investment over a long time, but again, for your time frame, if it starts to go down on you, are you going to get out with a small loss? Or are you going to let it go down for months and months? It may still be a very good investment over time, but the trader might say, holy cow, look how much I've lost. So that's what I mean is, what are you doing for your individual time frame, your individual account, your individual risk tolerance? If you're buying the markets now, they're very high. The trend is up, but your risk reward might be opposite because they've gone up so much. How much more reward is in it, and how much risk do you have in it? So you're always thinking in risk reward. Where do I think it can go? How much do I want to risk to make that? That's why charts help us. We can actually see factual data. So getting into a little bit more of advanced topics, why options? Options are great because they provide leverage. If you have a smaller account and you want to make a great percentage, don't trade stocks. They cost too much and they're a little bit more risky because we can lose a lot of money. Options provide us limited risk. Yeah, there's a lot to learn about options, but they provide us limited risk. If you want to trade, stocks are not the way to go. If you have a smaller account, stocks are not the way to go. Use leverage, use it as your friend, and learn about options. That's one of the things we key in on. Options are great for 3 reasons. They can help us grow our account faster than stocks. They can help us create income. Option strategies are the #1 way to generate income in an account. Whether it's an IRA, retirement accounts, whatever it may be, income generating strategies are the #1 way to grow your account, basically, from an income strategy. If you have 100 shares of stock, I talked about this a little bit earlier, if you have 100 shares of stock, you can gain 1 to 3% per month on your account. All you have to do is own 100 shares of stock. That's an income strategy, bringing in 1 to 3% per month. Finally, protection. The older you are, the larger account you might have. You have accrued a lot of assets, whether you own businesses, whether you have real estate, whether you have a big portfolio. We're all long and bullish the economy. Who here has seen the stock market go down? We all have seen the stock market go down. It can go down for years at a time. It can go sideways. Options allow us to make money when the markets are going sideways and down, so they create protection. Even if we don't have a big portfolio, but we have a business here, hey, we may be able to buy some protection in the form of very cheap options. So options are leveraged. The smaller your account is, the more you want to use leverage. And also, they provide us a lot of growth, they provide us income, and they provide us protection on our account. Options are very important. So again, here's an example of income. All you need is 100 shares of stock, and you can create 1 to 3% per month. So I'm going to show you an example of a stock, okay? If I can bring up my broker here. And again, if you have questions on brokers and things like that, we can answer all of those. So we're going to go, and I'm going to bring up a company called Vale. They're the second largest iron ore producer in the world. So basically, they're related to the steel industry. So obviously, construction and expansion, the more that that's going to happen, the more Vale is going to obviously go ahead and expand. So the stock right now, if you can see my mouse, is trading at $33.82. 100 shares, if I wanted to purchase 100 shares, I've got to sink in $3,300 roughly. I'm going to put that in. So I'm going to invest $3,300 to own my 100 shares of stock. And if I was willing to sell it in 13 days, if I was willing to sell it at 13 days at $34, roughly my buy-in price, so I'm saying I'm going to get rid of it at $34. No matter if the stock goes up, down, or sideways, I'm basically willing to get rid of it at $34 in the next 13 days. I can bring in 73 bucks. This is an option chain. I can bring in $73. So if I just do my math, $73 on a $3,300 investment in 13 days is what? About a little bit less than 0.5%, somewhere around there. In 13 days, I can make a little bit less than 0.5%. That's what options allow me to do. This specific strategy that I just explained is called a covered call. It's the #1 income generating strategy for anybody who owns shares, whether they're in a taxable account or in a non-taxable or qualified account like an IRA. It's the #1 strategy to create income. It is called covered calls. I can explain it in more detail later, but you can Google it and you can read about it. You can order books on it, whatever you want. But if you own shares of a company, understand what covered calls mean for you. It's a huge, huge amount. Think about that. 0.5% in 13 days, a couple percent in 13 days. It can happen. All you have to do is own some shares of stock. Protection. As I said, options allow us to have some protection on our portfolio. Who pays for auto insurance? Raise your hand if you have auto insurance. Raise your hand if you have health insurance, or your company might pay for it. How about life insurance? Okay, most people should have life insurance. How about portfolio protection? How many people here have a portfolio of stocks or anything like that? How many people are protecting it? If it goes down 5% tomorrow, the stock market, how much does your portfolio go down? It goes down 5%. Options allow us to protect that and buffer that loss. If I understand options and I'm worried about the stock market going down, or maybe I have a lot of commodity stocks because I'm in that sector and I work for Rio Tinto or something like that, and I have a lot of commodity knowledge, and if the dollar gets stronger and maybe commodity prices weaken and my commodity stock drops, I just lost a lot of my net value for my family. Well, options for very cheap can buffer that. If I might lose 5% of my portfolio, I could make back 0.5% or 1% in the next 30 days, 60 days, 90 days, because I purchased protection. So I'll bring up an example. Who here has heard of the company 3M? Anybody? 3M basically, who here has ever had a Post-it note? 3M makes Post-it notes. Do you think they're a successful company? Yeah, they're a successful company. They make a lot of products. They're almost like a diversified company basically because they're almost like an index because they have so many different products like GE. They do financial, they have wind turbines. You see what GE has commercials for, everything under the sun. Well, here's a chart of what happened over the past few days of 3M. They had their earnings. 3M invested a ton of money into the swine flu epidemic and doing research on it. Who here has had swine flu? Not many people. It didn't really happen the way they thought it was. So 3M burned a lot of money on that investment. And so as their earnings came out last month, because every quarter a company that's publicly traded has to report earnings because of the Great Depression in 1933 and things like that. That's why we have these rules in place. They said things are great, but we spent a lot of money and we didn't see a return on that investment. Well, their stock went down from $91 to $83. It went down $8. That's about 10% in 2 days. In 2 days. It's recovered a little bit, but the whole point is if you own a stock and earnings come out, there's no way for you to know what's going to happen. Maybe you buy protection. The people who were bearish and bought protection using options, they made money on the way down, and they lost money in their portfolio a little bit, but they buffered it. They did better than the overall market. They did better than people who just own 3M outright. So options allow us to have that variation in our portfolio and allow us to protect things. Another way to protect, for even cheaper than options, is Forex. We can use Forex to provide very cheap options. Why Forex? Leverage. It's a leveraged product. Leverage works both ways. If you're uneducated and you're going to lose money, you're going to lose it faster in Forex than you would in a stock or option account. If you're going to make money and you're a good trader and you're knowledgeable and you have a trading plan, all the things I've talked about, and you use fundamental and technical analysis, you're going to make money a lot faster on your account. It's aggressive. It is an aggressive trade, but on the other side of it, it's a very, very cheap way to hedge your portfolio if you have one. You can put up a very small amount of money if you understand the relationships between dollar and commodities. I'll throw out this example. If the economy expands and more people are flying around and going to trade shows and all these people are employed and they have more trade shows to go because business is getting better, what's going to happen to oil prices? Are they going to go up or down? They're going to go up. We're flying. We're driving places. Things are getting better. More people are hired. Well, oil is priced in dollars. So if oil goes up, what happens to the dollar? The dollar basically is going down because it's getting more expensive for us to buy it. Who's a big exporter of oil? What country is a big exporter of oil? They're just to our north, Canada. The Canadian dollar is getting very, very strong. And I can show you that because trading foreign currencies, we can bring up a chart of the Canadian dollar. So this is it as the economy has expanded. This is the Canadian dollar getting stronger and the US dollar getting weaker. So we used to be able to get 1.3 going to Canada. Now, on the right scale here, 1.0. We're at parity with the Canadian dollar. It's strengthened a huge amount, huge percent, because obviously oil prices went up because the economy is getting better and better and expanding. So all of these relationships can help you to make money. And these relationships aren't hard to define and see and take opportunity and take money out of. So that's what I do is I say, what's the big picture? You guys are able to understand it. Hey, let's go look at your individual stocks. Let's go look at your individual account, your goals. Let's go make some money. So again, to start to wrap up, here's what I talk about, intermarket relationship trading. Yes, that's my term. You probably haven't heard it. I think I kind of coined it. So again, intermarket relationship-based trading. What is oil doing? What's gold doing? What does that mean for me as a trader, as an investor? What does that mean for holding those kind of companies in my portfolio? If an improving economy, we're going to see oil prices go up. We might not go trade oil futures, but here's a stock that tracks oil prices. Okay? This is a stock that directly is related to oil prices. Which way is the stock going up over the past few months, September, October, November? It went from $32 to $37 in about 60 days. In 60 days, if I understood the relationship between the stock market getting better and things like that, $6 of a $31 stock in 2 months, 20%, right? 20%. $6 on a $30 stock. Who would like to make 20% in this room in 2 months? Go ahead. Everybody would raise their hand. This is the kind of stuff that you can understand. The other thing that I talked about is support. Remember, support's my floor where people are investing and buying. Well, this chart is telling me that there's support here because people like this stock down in this area. Well, look what showed up here. That is an area of support. People are accumulating, 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 accumulating. If enough people accumulate this stock, there's only one way for it to go. It goes up. If I pay attention to fundamental news, hey, the manufacturing sector is expanding. I can see that factual data on my economic calendar. Hey, the jobless rate just stayed and maybe dropped a little bit. Hey, we added some jobs this past month. Oh, oil prices are going to go up. Oil stocks are going to go up. Price of oil. It all starts to get related. This is not brain surgery, guys. As I said in my first slide, I'm a ski bum. If I can do this and learn it and make money from it, you guys can. So again, talking about foreign currency there, the relationship between the dollar and certain currencies. We talked about the Canadian dollar because they export oil. Australia exports a ton of gold. Who's watching gold prices these days? They're going through the roof, and I'll show you. I'll show you the price of gold right here. All right, everybody can go out here and trade this. In this room, you guys can go out and trade gold. Here's gold prices. They were at, and you guys have to multiply this by 10, but they were at $1,120 an ounce in August. They're now at $1,360 an ounce. What does that return in about 5 months, 4 months? From August to now, 3-4 months, we went up, what, about $24? $24 of a $113 stock. That's 22%. Not bad for 2 or 3 or 4 months. Let me show you what the dollar did against the Australian dollar. Here's the Australian dollar as prices have gone up. There's the same time frame, June, July, August, all the way up to now. So the Australian dollar used to be at 81 cents to our dollar. Okay? We could go and get more for our money in Australia. Now, it's at 1.01. When you go to Australia, $1 now equals $1 in Australia. You can't get a better rate now because they export a lot of gold. Their dollar has gone up because that's their commodity, and oil and gold prices have gone up. So again, back to that slide of intermarket relationships, it starts to get easy to understand. You time that in with who you are, you time that in with some keywords on technical analysis, you can become a very savvy trader. So wrap up. If a ski bum can do it, so I missed an N on my learn there. If a ski bum can learn to trade and invest, so can you. Use fundamental analysis to get the big picture. That's called top-down analysis. Use technical analysis to hone in on your individual stocks and investments that you're looking at. And then obviously understand different strategies that can make you money in bull markets, bear markets, and sideways markets. Use that technical analysis to time your trade to give you that risk reward. And again, as I said, options or Forex allow smaller participants, smaller size accounts to go in and create income and protect your downside. So who wants to create income? Who wants to protect their downside? That's what the financial markets provide. Resources. You have my email here. You have my email on the handouts that you were given. You can come talk to me throughout the day over here on that handout. Again, I'm local. You can find me in Park City. You can find me in Salt Lake at the University of Utah. You can find me online at the NSRO.com. You can find me doing webinars. You can find me hosting trading clubs. All of that information is for free. We want you guys to be educated. So I appreciate your time and participation with the questions. And again, enjoy the rest of the afternoon.